If you can hear me, please respond. Unmute yourself. If you can hear me, please unmute yourself and just say hi. Okay. Okay. So happy Independence Day, everyone, and good afternoon. It's a pleasure to welcome you to today's financial analysis masterclass hosted by Plus Business School. My name is Oluwatobi, and I'm going to be your host for this section. So whether you are joining from Lagos or from Abuja or even outside the country, thank you for being here. So before we dive into the art of today's program, I'd just like to set up some few housekeeping notes just to ensure that everyone has a great experience. So first of all, I'd like all of us to keep our microphones muted throughout the section. So unless we are invited to speak by the host, by the guest speaker, or respond to prompts, we would like you to keep your microphones off. And if you have any question during the course of the class, you can just drop it in the chat box. It's going to be monitored. Then next, I'll just like to say, okay, so I'd like to ask us to be engaging the chat box, right? So if you have any comments, any questions, you just drop it right into the chat box. Once again, thank you. Just settle in, grab your note and biro, and get ready for some sections. So before we start with this program, introduce the I'd like to take a moment to introduce the brand that brought up this bootcamp, which is Plot Business School. So Plot Business School is a professional learning center located in Mobile Axis of Ogun State. So what they mainly specialize in is ICANN tutorials, tax academics, CBT examination, and they even do corporate trainings. They go to company and train them mainly in the accounting and finance area. But beyond that, right, we offer a purpose that runs deeper. So the school was founded by a super partner of a leading advisory firm in Lagos, someone who saw the gap between academic transactions and academic theories and real world finance practices. So the goal was to like bridge the gap between those, right? If that's learning happens where theory meets expectation. That's why we work alongside with seasoned professionals. There's professionals that have years of experience, right, doing the actual job, not just the theoretical aspects, to come in and then teach the upcoming ones. Right, our mission is simple: to raise the next generation of finance and business leaders, individuals who will go on to transform their communities, their industries, and even the world at large. So today's masterclass is part of those mission, right? It's not just a class, it's a step towards building a future where financial literacy, strategic thinking, and ethical leadership are part of the norms, right? So today I'm going to be your host, and my name is, like I said, is Olatobe Adekoya. I'm also a chartered accountant, and I work with one of the big fours. So our guest speaker, his name is Michael Oluwalere. I'm sure you guys, some of you will have met before because we had a boot camp last month where we did some basic financial analysis. Right, but in this master class, we're going to be diving very deep into the finance aspect. So Michael Oluwalere is a seasoned professional, finance professional, is an educator and also a mentor. So he's also a associate member of the Institute of Chartered Accountants of Nigeria, ICANN, and he currently serves as the Director of Studies at Pathfinder College of Management and Accounting, where he's committed to nurturing the next generation of chartered accountants and finance leaders. So Michael also lectures strategic business reporting, that's SBR, at Plus Business School, which is located around Mowe Axis, and has successfully mentored over 50 chartered accountants in their professional journeys. His wealth of experience in both theoretical and industrial experience span across real estate, fashion, consulting, exports, and edtech, where he has excellent, where he has excelled as an accountant and head of finance. Right. He also the certification on data analytics and financial modeling from Corporate Finance Institute, and currently work in the finance department of UTIVA. UTIVA is the UK accredited edtech firm. Also, they do corporate training in that firm. So apart from all these, his professional life, Michael loves music, right? He plays bass in his church choir and also enjoy playing piano and saxophone. So can you just confirm if you all can still hear me? Can you all still hear me? Okay, Rachel, thank you.
Yeah, we can hear you.
Okay. So today we are going to be doing a lot of, today is like section one of the financial modeling class. It's going to span across 3 months because we want to actually go in depth. We want to go detail, right? Not just give you a scrape of it, right? So, Mr. Michael, I don't know if he's on this call. Okay. So before our guest speaker comes in, right? Our guest speaker is going to walk us through financial analysis, the role it plays into decision making today. Right. We're also going to do like a case study scenario. So it won't just be like we're teaching you the theoretical aspect also. We're going to do like a practical section where we're going to see numbers, how those numbers, how they are translated into stories. Because it's not just enough to know the numbers, right? You know why this number comes is like this, right? The assumption made to get those numbers and how to tell it in a story. In a story. And then what we're going to do today, we're going to just like touch the basic aspects today. Then in subsequent classes, we're going to be diving deeper. This masterclass is actually a paid class, right? Okay, sorry for the hold up. I was trying to get in touch with the guest speaker. So this course is going to be for 12 weeks, right? It's going to be filled with practical experience, and it's also going to be flexible, to meet in our, we know most of us are working, so to meet in our demand to when we all are available. So we're going to like schedule the time individually. Look for the time that is best suited for everybody. And then it has about 6 models that we're going to be going through. And each of those 6 models is divided into is broken down into two. So that's 12 in total. Right. So before the guest speaker comes in, I'd like all of us to introduce ourselves. Just to know, you just tell me who you are, where you are currently living, and the organization you currently work for. And if you're a student, you tell me the institution that you are currently schooling. So who wants to go first? Okay, let's start with Israel. Israel Ola. Can anyone hear me?
Yes.
Sister Blessing, Antonia. Okay, Glory. Can you go ahead and introduce yourself? Your name, where you're calling from, and your school.
Okay, good afternoon, everyone. I'm here with Glory by name, and I'm from Lagos. I reside in Lagos. I'm an accountant by profession, and I'm an employee. I work on that in an organized in a school as an accountant.
Okay, that's nice. Glory. Okay, who wants to go next? Antonia, Israel. Or if you can't talk, just drop it in the chat box. Okay, so it looks like those guys, they're just with us. Oh, Aliu, are you with us? And Orekoya Elizabeth. Can you hear me?
Yes, I can hear you. Good afternoon. I'm with you.
Okay, good afternoon. So we're just introducing ourselves. So
Okay.
we're introducing our name, our current location, and I am our organization that we work with, or if we're a student in the institution we are currently schooling.
Okay.
Good afternoon, everyone.
Good
Hello.
afternoon. So,
Good afternoon, everyone. I am Orekun Ataiwe Elizabeth. I am an accountant in Dominion Finance Limited. Obalende, thank you.
okay. Okay. Thank you for that. Okay. So I'm not going to go through an overview of what this course is about, right? The modules that we're going to be taking. So for module one and module two is mainly building your foundation. Yes, this is where we're going to talk about we're going to start from the scratch, making sure that everybody understand the basis of what we're doing. So I'm going to start with, the key concept of accounting, and that's the accruals, the materiality, consistencies, what makes up an accountant, because that's the foundation of accounting itself. We have key concepts and conventions. We have the standards that guide us, right, when preparing financial statements, because we're going to be working with financial statement a lot. Numbers in general a lot. So you need to understand how those numbers are, generated, the rules that guide those numbers. So that's why I'm going to start from the basics. That's for module one and module two. So we're going to do understanding the diverse business models. Okay, understanding the diverse business model, linking strategic initiative with financial outcome, and we're going to also do a case study review, right? We're going to actually bring in a financial statement where we're going to the basis, the concepts used in preparing them, because you need to actually understand how they were prepared before we can forecast them, if we are going to forecast them, and even tell a better story on the financial performance of the firm. So for module two, we are going to be going to the ratio analysis. Ratios. We have the liquidity ratios, efficiency ratio, even shareholder ratios, and the likes. Right? We're going to it's not just knowing this ratio is a formula. Okay, what is about interpreting the ratios? That's the main aspects. Right? The profitability, liquidity, efficiency. What does it mean to a firm? Right? We're also going to do some analysis. We have trend analysis, ratio analysis, common size analysis, right? So we're going to go deep into those areas. Ratio analysis, let's say, for instance, year-on-year growth of a company, or comparing a company with the industry standards. Is this the company has performed the industry, or how well has it done at large? So we're also going to do a case study for all these models. We're going to be doing case studies, so we all understand what we're doing, not just theory. I'm not here to teach you the theory, like what's the definition of this. It's actually the practical aspect that are mainly focused on. So we're going to do for module two, right? We're going to focus on the ratio analysis, that's trend. Okay, for module three, this is where we will come into casting and financial modeling. I'm sure all of us have heard of financial modeling before, right? So we're going to be doing a lot of forecasting the numbers. And it's not just merely forecasting the numbers now, it's the interrelationship between the numbers. Let's say, for instance, right, you are trying to forecast a bank financial statement. And if you forecast that the loan, right, the loan and advances to customers, the loan and advances to bank, if you forecast that it increased to about it increased for about 20%, right? Automatically that is also flowing into the interest income, and it's also flowing into your fees and commission, because for all those loans they collect management fee and all sort of fees. right? So it's actually the interrelatedness of those numbers. So we're going to be looking at that in this module 3, how to forecast your POL leg and your balance sheet leg. Whatever you get from that, how to build a cash flow statement from it. So it's mainly focusing on the three statement models, right? And also we're going to be talking about scenario analysis. So you can build different scenarios. Okay, best case scenario, base case scenario, worst case scenario. So okay, if there's a fluctuation, because we can predict that the let's say sales increase by 20%, but then things happens in the economy and we need to change a lot of things, right? So how that will be imputed in our models, right? So that's what we're going to look at it, how to even structure the model. So you know how one input affects the rest, right? So for module 4, that's when we come into investment and valuation analysis. For investment and valuation analysis, we are going to collect NPV, IRR, payback period. I'm sure you guys have seen the theoretical aspect of all these investment and valuation analysis. But in a real life scenario, right, it's not as it is in the theory, because when you're writing exam, they'll have given you your cost of capital, or they'll have given you your work, or they'll have given you a lot of assumptions, right? But all those things they're already giving you the question in the theoretical space. But in a practical scenario, in real life, right? So I don't know how it's going to right. So factors that affect those, how they generate those discounting factors that we're going to be talking about in module 4. So that's what we're going to talk about we're going to now talk about our investment and valuation analysis. Okay. Hi, Mr. Michael. Are you with us?
Yes, Mr. Toby. Good morning or good afternoon. It's really
Good
good to
afternoon.
be here. Yes, I'm really sorry about the technical glitch experienced earlier. So my Spectranet device, I don't know. This is the first time I'm having technical issue with it, so I don't know what the problem is, but I'm just trying to use another internet connection. So yes, I think you can just wrap up with this. Then I will take it from when you are done with all the modules. So you can just wrap up with this, or do you want me to take it from here?
Okay. Let me just wrap them up.
Oh, okay.
Then okay, so how we, as I was saying, how we actually get our discounting factor, that's our cost of capital. There are a lot of things that affect it. The NPR rate, that's the interest rate of the country as a whole. There are a lot of inflation rates, even economic sentiment, a lot of things that affect it. So that's what we're going to be looking at in module 4, which is investment and valuation analysis. So module 5, for module 5, we're going to be looking at the financial analysis tools and reporting. For financial analysis, a lot of people use Excel because that's what is a lot of people knows, right? But there's also Power BI and other tools that can be used for financial modeling and planning. So that we're going to be looking at in the module 5, and how to write a report, because it's not just about calculating the numbers. Now, how do you present it to your report that you can present to your manager or your board? So I want to do a lot of charts there. Then for module 6, then we're going to do an advanced case study that include M&A, that's merger and acquisitions, and strategic financing scenario. Because in merger and acquisitions, right, they do a lot of valuation of companies, right? How much are we buying? All right. Then we're going to look at our different techniques, right? You can do our discounting cash flow method. We can also do we're going to do our EV. Look at our EV to EBITDA ratios and the likes, right? Because that's what is mainly used in merger and acquisitions. It's just going to be an interesting class, but I'm going to let Mr. Michael take over, right? Because he's going to be our key speaker for these courses. So, Mr. Michael, you have the floor.
All right, thank you so much, Mr. Toby. So Mr. Toby is one of the financial analysts we have in house in Plus Business School, and he actually works with what's the name of that your company again? Mr. Toby, are you there, sir? Yes, EY. He works with Ernst and Young, which is one of the big four accounting firm globally. So yes, and yes, it will be co-facilitating this masterclass with me. So even though this is a 3 months masterclass, this is a 3 months masterclass, and we have a whole lot to do. We have a whole lot to do. So we are going to be introducing you on how to master the financial analysis, and also apply it in the course. At the end of this training, you will be able to gain hands-on experience on how to handle real life financial analysis. So yes, I don't know if the host can, okay, allow me to share my screen. Okay, so yes, thank you guys for having me. Once again, my name is Michael Oluwalere, and I'll be your trainer for this masterclass. And I also understand that we have some people that they just join us for today's boot camp. Yeah, which is okay. This session so that we can see what this is all about. And okay, we are doing this on Independence Day. So happy Independence Day, everyone.
This is Joshua. So he came back yesterday night and he slept here around.
Please, can we mute your mic? I think I can hear some background noise, please. Host, can you just mute everyone so that we don't have all this noise? Ensure that everyone is muted, please.
Yeah, you can continue. Everyone is muted now.
Okay, thank you so much. Thank you. So yes, all right. So in order to minimize noise, we would just mute everybody. If you have anything to say, kindly raise up your hand and would give you the privilege to talk, ask questions, raise concerns or your opinions, as the case may be. So yeah. So as I've said, my name is Michael Oluwalere, and I have Mr. Toby Adekoya with me here, and we'll be handling this session together. So yes, So Mr. Toby has already introduced the course to us, and yes, today we are just going to look at the first aspects. Yes, so we don't have all the time. We'll be looking at the foundation of financial analysis today. Yeah. Okay, so let me just talk about the certification before we go straight to what we have for today. Can you all see my screen? Well, let me reshare my screen again. I'm not sure this screen is moving. Let me share the screen again. Please give me 2 seconds. All right. So let me walk us through the certification before we go straight to what we have here. So we have the assessment and certification. So for the class, you have 100%, and the pass mark for this course is 70%. So the class participation and quizzes is going to be 20%. And here there's going to be active engagement and discussions. We have weekly quizzes, and we also have peer collaboration activities. So this class will be going to be meeting twice every week, minimum of once every week. Like this week, we only meet this week. Meet twice, as the case may be, so that we can be able to cover up on time. So either we meet once every week or we meet twice every week. And our meeting is going to be on a Wednesday between 7 to 9. And if we are meeting again, that will be on a Saturday from 8 p.m. to 10 p.m. So we're meeting on every Wednesday, 7 p.m. to 9 p.m. Then every Saturday, if there is any need to have a second class during the week, we'll meet 8 p.m. till 10 p.m. on Saturdays. So yes, so everybody that's registered for this program, you're all welcome, and we really need you to be actively involved. There are a lot of things to learn here. There are a lot of things to learn here. So your activeness in class will make us to be able to award the 20% mark to you. Then the 60% will be based on the capstone projects. So you have 3 major capstone projects that you'll be working with as far as this masterclass is concerned. And this project, everybody that here will be expected to participate. I mean, all registered students. Then at the end of the day, we'll have a final presentation, which is 20 marks. So now during the presentation, we can have IRLs on board. So you pitching what you have learned to others so that they can see that, oh, you really gain hands-on experience on. And who knows, from there, someone can just get hired with a multinational company and you're doing the financial analysis. So please let us take this program very, very serious. Yes, we have financial analysts that are indigenous of Nigeria, they are citizens of Nigeria, but they work remotely abroad. So yes, so financial analysis is actually known, is actually needed globally, and we don't have enough financial analysts. We don't have enough financial analysts globally. So which means that there is need for financial analysts, for more financial analysts, and that's why we think it is necessary for us to organize a training like this. So yes, financial analyst that knows how to use the analytical tools like Power BI, Excel, and the likes. So yeah. So and at the end of the day, if you're able to meet the 70%, which is the pass mark, then we'll give you the certificate of completion. Yes, and also you would have access to professional portfolio review. So yes. So that's just that. That's just that. So this is what we have for today. Introduction to financial analysis and the core concepts of financial analysis. Yes, introduction to financial analysis and the core concepts of financial analysis. So we look at the definition of financial analysis. We look at different financial analysis or different analyst role. We'll look at mastering the three financial statements. Then we also look at how to apply accounting principles because we are dealing with financial analysis. So financial analysts need to understand accounting principles, and that's how we would be introducing accounting principles. So if you are on this call and you're an accountant, I think you would have an edge. Probably you studied accounting or you're a member of ICANN, whether student member or an associate member. So yes, so this is just a summary of what we're going to be looking at in today's class. So first and foremost, I and I've been doing financial analysis now for the past for more than 5 years. Yes, for more than 5 years. So, and I've analyzed financial statements of companies in different industries. So I'll be talking about what I've learned so far in my 5 years plus journey as far as financial analysis is concerned. So what is financial analysis? What is financial analysis? Now, the definition you can see on my screen, it says that financial analysis is the systematic process of examining financial data, primarily from the financial statements, to understand a company's performance, to understand the company's stability, and also for future prospects. Yes, to understand the future prospects of the organization. Now, simply put, financial analysis is the art and science of turning numbers into meaningful insights that guide critical business decisions. Now, you have your financial statements. If you just have those financial statements without analyzing them, you will not be able to understand the business properly. So financial analysts, they actually examine the financial data. Yes, they examine the financial data and they help users of the financial statement to understand a company's performance in terms of profitability. Yes, in terms of profitability. They also help us understand the stability of the company in terms of financial performance, then also the cash flow of the organization. Yes. Why financial analysis matters? Financial analysis help us to track our profitability, help us to measure operational efficiency, and it also gives us opportunities for growth. Yes, it helps us with the opportunities for growth. Now, it helps us assess returns. So like if we have investors who invest in a company, they can carry out financial analysis to know okay, what will be the return on investment be? What has been the return on investment of this company for the past 5 years? Is it sustainable? And what are the inherent risks that can occur? What are the inherent risks that can occur? Yes, so that is actually what financial analysis is. It also helps us to evaluate creditworthiness and repayment capacity before extending credit. Now, if a company goes to the bank and say, "Oh, we want to borrow a loan from you, we need loan from this bank," no bank will give loan to everybody. Before they give you the loan, they will ask you, submit your financial statement. Has anybody in this room been involved? Maybe you work as an accountant somewhere, or you work as a management staff somewhere, and you are aware of maybe your company being involved in borrowing loan. Can you just talk and let me hear? Because I would like to ask questions and engage us so that at least I'll get feedback and to be sure that we're on the same page. So if, let's say you work in a corporate organization and you work in the top management level, or you work basically in any capacity, and you are aware that your company actually borrowed loan, and you are aware that these banks request for the financial statement of your company, I would want you to just signify and tell us one or two things so that we can make it more practical. Yeah, so I understand that every company borrow loan at any point in time. Even Dangote, who is the richest man in Africa, you understand, the company has loan too. So yeah, so I believe wherever we work, at one point or the other, our company would have borrowed loan maybe in the past. So yes, can somebody just talk to us quickly? Anybody? Kindly raise up your hand so that the host can unmute. I think I'll call names. Mr. Abel. Yes, Mr. Abel Ogun, can you help us out? I know you're an expert in finance. So at some point or the other, have you been involved, maybe your company involved in obtaining loans from the bank, and what are the documentation requested from the bank? So just walk us through what you know quickly. You can unmute, sir.
Okay. The last one good afternoon, everybody.
Good afternoon, sir.
Okay, the last one I work with, and there was a time we were getting a loan from a firm. They requested for audited financial statement, which I actually presented to them. They requested from other document relating to whether we have what's it called, loan, any debt in other financial institute. I think they were trying to check whether we are owing other firm. Also, they're also trying to check the last loan that we took, whether we have liquidated it, pay it off, and some other documentation like that I actually presented to them. Though we later did not take the loan, because I told the MD that because the interest rate was extremely high. It was higher than the normal commercial bank. So after I explained things to my MD, the MD said, okay, it's fine. That they should not take it because their condition was really actually extreme.
Okay,
so
all right.
that's a few information I have.
Yeah,
In that.
thank you so much for that, sir. Yes, thank you so much. Now, just like Mr. Abel said, no bank would want to give you loan as a company and will not ask for your financial statement. It's not possible. They will ask for your audited financial statement. Yes, they will not even ask for ordinary for management reports, because they know that management reports can be fabricated. They will ask for the audited financial statement, just like what Mr. Abel said. So, the reason why they are doing that is they're going to carry out financial analysis of the company. Yes, you don't need to be aware. They carry out financial analysis. So they can tell you, go and bring the audited financial statement for the past 5 years. They want to see how the company has been performing for the past 5 years. And they will now use that to draw a forecast as to what the company's performance will be in the next 5 years. So if you say that, oh, you want to borrow loan and you pay in 5 years' time, you say, oh, go and give us 5 years backward financial statement so that they can analyze the financial statement. Now, what this means is that this skill of financial analysis is actually also needed in the banking industry. Yes, they do this most times for people that obtain loan. Bank always give out loan. Yes, on a daily basis, they give out loan. So they also conduct financial analysis to evaluate the creditworthiness and also the repayment capacity before extending credit facilities to their customers. Before extending credit facilities to their customers. So that is that. That is that. Then we have to ensure compliance with standard and maintain market transparency. Yes. So that's that. Now, I'll walk us through the analyst mindset. So if you say you are a financial analyst, so we have different types of analysts. We have financial analysts, we have data analysts, and the likes. So financial analysts, yes, financial analysts are also data analysts because they analyze financial data. So the first thing is analysts are always curious. Yes. If you say you're an analyst, you would be curious. You would be a curious person. So curious people are people that are always asking questions. If you are curious, you ask questions. And people tell you that you ask questions too much. Yes. Like for me personally, people that know me, they say I ask questions too much. Yes. And that's because of exercising my attributes of as an analyst. So yes. So they always ask why behind the numbers. Why behind the numbers? Yes, as analysts, you need to understand the why behind the number, and that's why you need to ask questions. Pay meticulous attention to details. Yes, analysts pay attention to details. That is very, very important. That is very, very important. You need to pay attention to detail as an analyst. Thinking critically is also one of the attributes of an analyst. Connect financial results to real business activities. And also, analysts knows or analysts know how to tell stories, compelling stories. Now, financial analysts work with numbers, but they tell stories with the numbers. They tell compelling stories with the numbers. So that is translating the figures into actionable insight. Now, you'll be able to understand financial analysis to the level that a company will engage you to carry out financial analysis, and you can tell them what is happening in that company, even though you don't even know what's happening. And the people that are there in the company will say, wow, wait, are you a prophet? So because you already understand the financial principles, the financial concept, and you understand what it takes to understand the financial position as well as the financial performance of the organization. So yeah. So we have different types of financial analysts, and you can actually specialize in any of these type, any of these types. So we have financial analysts, we have investment analysts, we have FP&A analysts. FP&A means financial planning and analysis. Yes, financial planning and analysis. That's what FP&A is. So financial analysts, they work within companies to monitor the budget, evaluate operational performance, and prepare management reports. Yes. So while investment analysts, on the other hand, they evaluate companies' share, evaluate companies' bond. They are involved in valuation of companies. They recommend and they also use different valuation method or models to give clarity as to should a company invest or buy shares or hold a particular financial instrument. So that is what investment analysis is all about. So although this course is strictly for financial analysis, and maybe we can do some foundation aspect of investment analysis, yes, along the line. Then FP&A analysis typically means financial planning and analysis. So it's actually a branch of financial analysis that also look at forecasting revenues and expenses, and it also has to do with preparing budgets and also coming up with forward-looking analysis for companies management. So so the FP&A analysts, they bridge the gap between historical performance and also the future strategy. So now, the core skills of financial analysts are they have technical skills like, okay, the tools used for financial analysis, which are Microsoft Excel, Power BI, SQL, Tableau, and the likes. So yes, then the analytical abilities, which involves ratio analysis, trend analysis, scenario testing, sensitivity analysis, and the likes. So these are analytical skills of financial analysts. So all financial analysts should be able to know how to use ratio, and you're going to understand how to use ratio as time goes on. Yes. So the next one is business acumen, like deep understanding of different industries, business models, and strategic frameworks. So just like as I've said, I've worked for different organizations in different industries, and so we, each industry has its own peculiarity. So as a financial analyst, you need to understand the peculiarities of each industry. Now, the last but not the least, and this is the most important thing, communication. Analysts must be able to communicate. Now, the reason why you are employed as an analyst is because you understand financial principles and you can communicate. Now, if you are the best analyst in this world and you can't communicate, you are not a professional, because you communicating the work that you have done, you being able to derive insights and communicate to users of the financial statement will give more clarity. So exactly. So let's look at this example. It says that an analyst at a consumer goods company discovered that while sales were rising 15% year on year, revenue was rising 15% every year. Profit margin was shrinking, or profit margins were shrinking due to escalating raw material costs. Now, can anybody tell me how is it possible for your revenue to be increasing or your gross profit margin to be reducing? Anybody? Please, let's feel free to talk. Let's feel free to talk. Who can tell us how is it possible that your revenue is increasing, but the other way around, your gross profit margin is reducing, or your profit margin is reducing? What can lead to that? If revenue is increasing, profit should also increase. But if profit is reducing, yes, so what can happen? Madam Elizabeth, do you want to say something? Madam Elizabeth, kindly unmute.
I don't know.
Okay. Who can help us out, please? Kindly just raise up your hand. If you want to raise up your hand, just go to the participants section. Okay, somebody has dropped a chat for me. Increase in expenses, good. Thank you so much, Madam Glory. Increase in expenses. So now, if your revenue is increasing and your expense, now increase in expense in proportion is higher than increase in revenue proportion. So so if your revenue is increasing by 15%, but your expense is increasing by 20%, that means your profit will reduce. So yeah, and that is what financial analysts will help you to look at. Oh, a company thinks our revenue is increasing. We're making more sales. But you making more sales does not mean that you are going to make more profits. You also need to be able to manage your expense. And that is what the financial analyst will help you to do. Yeah. Now, a financial analyst can advise a company and say, your problem is not your revenue, your problem is your cost. Yes. If you're able to manage your cost, you're going to do much better. So it depends on the intricacies involved. Yeah. So that is just that. That is just that. So let's move to the next thing. Now let's look at understanding financial statements. Understanding financial statement. Now, as a financial analyst, you need to understand financial statements. Financial statement represents the language of business. Now, I used to say that accounting is a language. Accounting is a language. And now, International Accounting Standard Board, the IASB, has made accounting a language. The reason is they ensure that accounting is globally, at the global level, is done the same way. So that is the way a Nigerian company will present their financial statement. It's also the same way a UK company will present the financial statement or its financial statements. So before the ISV came into existence, this was not the case. This was not the case. But the ISV actually made accounting globalized in a way that if I'm a chartered accountant in Nigeria, I can understand the financial statements of a company in the UK or in other parts of the world. So that is what the IASB has helped us to achieve in the finance world. So now you need to, as I've said, financial statement represent the language of business, a standardized method of communicating a company's financial health and performance. So your financial statement tells us about the financial health, it tells us about the financial performance. So now, as a financial analyst, you are like a financial doctor. You're a finance doctor. A business is having problems. What you're going to do is you're going to be called to analyze the financials. That means you diagnose what the problem is, you diagnose the problem, and you make recommendation. You make prescriptions. So medical doctors, they diagnose the problem and they prescribe the necessary drugs to be taken. So as financial analysts, you analyze and diagnose the problem and you make recommendation and conclusion for the company as to what they can do better to improve. So that is what you'll be doing basically. Every successful analyst must master these three interconnected documents. So we have now the IASB, which is the International Accounting Standard Board, give us 5 components of financial statements in line with IAS 1, International Accounting Standard 1. Now, IAS 1 is now replaced by IFRS 18. For those of us that do not study accounting, it would be good as a financial analyst that you also learn the International Financial Reporting Standards, and we'll be talking about them once in a while as the class continues. So the IAS 1, which is now IFRS 18, says that we have 5 components. But out of those 5 components, we are just going to master 3 because these 3 statements are what we use for analyzing financials. Yes. The other ones, we don't really need them. Yeah, we can do without. For us to conduct financial analysis, we need these 3 financial statements. The first one is the profit. We call it all how the profit or loss statement looks like. I have a case study for us there before the class ends. So we'll look at how the profit or loss of a company look like. So the profit or loss shows the revenue, all the revenues of the company. It shows all the expenses, all the costs of the company, and also the profits for a particular period. Now, the profit or loss answers this question: is the company profitable? Is the company generating sustainable earnings, sustainable revenue? So that is the key question that the profit or loss answers. So it shows all the revenues, all the incomes, all the expenses, and also the profits after all the expenses has been deducted, after all the expenses have been deducted from the income. So yes, we are left with the profit. That is what the profit and loss or profit or loss account shows us, or the statement of profit or loss. So yes, we call it the statement of profit or loss. Now, the statement of financial position, on the other hand, it reports the assets, the liabilities, the equity of a company at a particular period of time. So now, the statement of financial position is seen as a snapshot of the company's uh, position at a particular period. So I always let people know that statement of financial position looks like you taking a camera at the end of your year. Yes, at the end of the accounting year, you just take a camera of, oh, this is what I have at the end of this particular year. And it's going to be in record. So for what you have for 2020 year end, it's going to be, oh, how much is in your bank account? How much are you owing? How much is your, you know? So that is what your statement of financial position will report. Now, the statement of financial position is seen as a picture, a snapshot, as I've said. And now, the profit or loss is seen as a video. So, like, it tells us what happened from the beginning of the year to the end of the year. That is what the statement of profit or loss tells us. What happened from the beginning of the year to the end of the year? What is the revenue from January to December? If you're counting year end in December. So that is the profit or loss account, or the statement of profit or loss. Yes. But the statement of financial position tells you what is the figure of this item as at 31st of December, which is the end of the year. So the statement of financial position answers key question like, what does the company own? That is the assets. What does it owe to others? The liabilities. And the equity, which is the residual interest after all liabilities have been deducted from the assets. Now, the last but not the least is the cash flow statement. Now, the cash flow statement is the only component of financial statements that reports using the cash basis of accounting. Now, the statement of financial position, the profit and loss statement, they use the accrual basis of accounting. Now, I will explain what accrual basis means when we, before the end of this class, yes, definitely today, I will explain what accrual basis of accounting is and you understand. But just know that the cash flow statement uses the cash basis. Now, it reports cash itself. It reports how much do you have in your bank account, the cash you have in your presently in your custody, you understand. So the physical cash you have right now. So it tells you where is the cash coming from and where is it going to. Yes, where is the cash coming from and where is it going to. So the cash flow statement breaks down the cash movement into three different activities. We have the operating activities, we have the investing activities, and we also have the financing activities. So now remember that these three statements work together like a three-legged stool. Each provide crucial information, but none tells the complete story alone. Please and please, as a financial analyst, you cannot just work on the profit or loss and say that, oh, you have done analysis. No, because the analysis you would have done for profit or loss is just to give reports on the profitability. Current assets, you need to look at the current liability, and these can be found in the statement of financial position. Yes, this can be found in the statement of financial position. You also need to look at efficiency. Efficiency has to do with your current assets, your current liabilities, also your inventory, receivables, payables, operating, cash operating cycles, and the likes. So yes, so you cannot use only one of the financial statements to analyze. You cannot only analyze the profit and loss statement. You also need to analyze the statement of financial position, and you also need to analyze the cash flow statement, as the case may be. So yeah, so please take note of that. Now, this is a very good example of a statement of profit or loss. We have revenue, cost of sales, gross profits, other income, selling and distribution expense, administrative expense, operating profit, finance income, finance costs, profit before tax, income tax, profit for the year. So this is how your statement of profit or loss looks like. Yes. Or yes, statement of profit or loss. This is how it looks like. So the annual report of a company that we're going to look at uh, um, before this. But this is basically the content of the statement of profit or loss. Now, in the statement of profit or loss, we have just two elements of financial statements, which are the income or expense. Now, the income are the things that are added. Anything you see that is added between the revenue and cost. This selling and distribution expense was deducted, so it is anything that is added is an income. So exactly. So the next thing is the statement of financial position. So I just listed things that are in the statement of financial position, but I'll show us in the template I have on how it looks like basically. So on your assets, you have the non-current assets, you have your current assets. So examples of non-current, okay, assets generally are um, assets generally are resources owned by, okay, don't let me say owned. I would rather use the word controlled because IFRS 16 lease, yes, also give us the privilege to identify an asset that under lease arrangement. Yes, we can identify an asset under lease arrangement. So your non-current assets, your asset basically are assets that are controlled, resources that are controlled as a result of past events, which will bring future economic benefits into the company. Now, the assets are divided into two. We have the current and non-current. So as the name non-current implies, it means that the assets will give you future economic benefit for more than 1 year, for more than one accounting year, that is for more than 12 months. If you have an asset that gives you economic benefit for more than 1 year, it is a non-current asset. A very good example is property, plant, and equipment, intangible assets, investments, property, yeah, and the like. Then your current asset are those assets that gives you future benefits within the space of 1 year, within 12 months. Examples are inventories, receivables, cash equivalents. We have prepaid expense. Yes, prepaid expense are current assets as well. So equity, a very good example of equity is your share capital. Your equity is the residual interest of your liabilities, of your asset rather, after your liabilities have been deducted. After your liabilities have been deducted. So we have share capital, we have retained earnings, we have other reserves, we have the borrowings, the deferred tax. These are non-current. So these are liabilities that will be due for more than 12 months. That is a year. The current liabilities are those liabilities that you need to pay within 12 months, which is a year. So the the conceptual framework define liability as a present obligation as a result of past events, which will lead to future. Liability is the opposite of your asset. Your asset gives you a benefit you in the future. So yeah, so that's just that. Now the statement of cash flow is divided into three different activities: where operating activity, investing activity, as the statement of cash flow is presented in the case study I have for us before the end of the class. So the operating activities, we have the profit tax, depreciation is added back, add it to the statement of cash flow. Any money that goes out, you deduct it from the statement of cash flow. But they are divided into three different parts: operating activities, investing activities. So we have a mini exercise here. We're going to review a simple financial statement. So I have the financial statements of the profit for the year, the total asset and liabilities, as well. Okay, let's quickly look at that before we go to the key accounting concepts. So let me know if you have any question before we move forward. Does anybody have any question before we move forward? Are you getting any value from this class? Any question? Okay, yes. Mr. Israel, please go on. Ask your question. Host, please, can you unmute Mr. Israel?
Good afternoon, everyone.
Yes, good afternoon.
Thanks so much, sir. A quick one here. I want to just ask you to expatiate on liquidity and gross profits.
Okay, liquidity and profits. Okay, we have different types of profits. We have gross profits, we have operating profits. Yeah, but I will just explain the difference between I will explain the difference between what's it called? I'll explain the difference between liquidity and profit generally. So when we're talking about liquidity is saying, do you have enough money to run your business? That's what liquidity is saying. So liquidity is comparing your current assets with your current liabilities. So do you have enough money to run your business, or are you in debt? So like if you, okay, so aside money, or let me just to put it, do you have enough working capital? So I think that's the right word to use. Do you have enough working capital to run your business? So now working capital actually means current assets minus current liability. If you deduct current liability from your current asset, that's your working capital. So now a business is liquid if the current asset is higher than the current liability. A business is liquid if the current asset is higher than the current liability. Yeah. And now, if the current liability is higher, it means that the business is not liquid. If the current liability is higher than the current asset, it means the business is not liquid. So, and what I mean is that it means that you are owing more than what you have. You are owing more than what you have. And if care is not taken, the people that you are owing, they can be disgruntled and may not want to do business with you again. So take, for instance, your supplier. You have been owing your supplier for like almost a year, and you promise that you pay him within 2 weeks. 2 weeks has become 10 months. that supplier can be disgruntled and you will just want to buy something supplying because I don't know when I will collect my money from you. So that person can be disgruntled. And if care is not taken, you may not have to do your business again. So liquidity has to do with, oh, do you have enough working capital? Are you able to manage your working capital correctly? Profitability, on the other hand, means that your business is viable. That is, your income is enough to take care of all your expenses. Your income is enough to take care of all your expenses. And your expense is less than your income. So after expenses have been deducted from income, what is left is the profit. So your profit is when your income is more than your expense, what you have left. Have I answered your question? Mr. Israel, have I answered your question? Kindly let me know if I have. Oh yeah, yeah. Good. So okay, so I want us to look at this case study. If you can see my screen, I have a PDF here, and this is a case study of Nesu Nigeria PLC. Can anybody see it? Wow.
No, we can't see your
Yes,
screen.
you guys are not seeing. Let stop sharing and reshare. Let me reshare. Okay, what about now?
We can see your screen now.
Okay, good. So this is the annual report of Nesu Nigeria PLC. Now, in the annual report, there are so many things involved, but I would only, this is Nesu Nigeria PLC for December 2024, which was last year. But I will just walk us through. So this is the content of the reports. We have directors and other corporate information, result at glance, directors report, statement of corporate responsibility. Now, we have so many things involved. Now, the financial statement is from statement of profit or loss, statement of other comprehensive income, statement of financial position, statement of changes in equity, statement of cash flows, and notes to the financial statements. All these are the financials with respect to International Financial Reporting Standard or the ISB framework. So yes, so we'll be looking at each of them one after the other because don't forget, we say statement of profit or loss is one of the things we look at when we're analyzing financials. Statement of other comprehensive income is also part of P or L in a way. Statement of financial position, then statement of cash flow. So in today's class, it also covers reading financial statements. It also covers reading financial statements. So our statement of profit or loss is in page 28. So let me just go to page 28. So this page 28, and this is the annual financial statement of Nesu PLC. Now, as you can see, Nesu PLC made revenue of 958 million in 2024, although their revenue was 547 in 2023. Can anybody tell me anything? Is there anything wrong with this company's financials? Just looking at it, do you observe anything? The revenue, gross profits, other income, profits, and the like. Do you notice anything? Just one thing that summarize what you are saying here. Anybody? Okay, B1017, kindly unmute. Our host, I want you to take note of people that wants to talk. Right, those are raising up your hand so that you can allow them. Yes, please, you can talk, please.
The finance cost is too high, showing that they have venture, they borrowed a lot of money during the year, and they have to pay a lot of interest.
Okay, good. Thank you. That is that is one of the wrong thing in these financials. If you notice, the gross profit looks fine. The result from operating activities looks fine. But the moment you get to finance income was lower, finance cost was higher. It means that Nesu is paying interest of 392 million. If you are paying interest of 392 million, it means that your loan is in billions, isn't it? Are we together? Okay, I just remember that the cost of sales is high in 2024. Yes, the cost of sales is high in 2024, but we can say that, okay, what's the difference? The difference is about 300,000. And the difference in revenue is 400,000 plus. So that cost of sales being high is not really the major reason why. If you even check, our loss here is like double, even though they made a loss of 79 million in 2023, but in 2024, the loss was 164 million. So which means that their, what's it called? Which means that their loss doubled. Their loss doubled for 2024, in 2024 actually. So, but the major problem here is the major problem here is the interest. And if you even notice, the finance cost even increased. It's not reducing, it's increasing. So which is saying that most likely they borrow more loans. So if you check now, I told you that it is not enough. Looking at the statement of profit or loss is not enough. They are like three stools. You have to look at what is in the statement of financial position. So for this finance cost now, what will affect the statement of financial position is your non-current liabilities. So let's check the non-current liabilities. The non-current liabilities will be very huge. Trust me. Let's get there. You will see what I'm saying. I've not checked the financials before, honestly. This is the first time I'm looking at it also. But I can tell you that the loan or the non-current liability will most likely increase. Yes. So if you check the non-current liabilities, they said interest-bearing loans and borrowings. Now, interest-bearing loans was 365 million in 2023, and interest-bearing loan is now 545 million in 2024, which means that their loan increased. It means that during the year they borrowed more loan. Now, statement of financial position is reporting that it seems like more loan is borrowed, but I can see it in the statement of cash flow if truly they borrow more loan. So the statement of cash flow will tell me whether they borrow loan or not. The loan they paid during the year and the loan they borrowed more during the year. So this is a statement of cash flow. The statement of cash flow under the financing activities. Oh, sorry, this statement of change in equity. Let's check the statement of cash flow. So the statement of cash flow under financing activities, it says that proceeds from loans obtained, intercompany loan, 12 million. The loan they got in 2024 was 12,305,000. Intercompany loan. Bank loan was 73 million. Loan repayment, 32 million. So the loan repayment they made was lower than the loan they got more. And okay, they said loan repayment here was 111. Bank loan. Okay, the bank loan they got here was actually higher. Okay, the bank loan they got here was actually higher. But if you look at, okay, there was also dividend paid. There was finance cost paid. Finance cost paid is the interest that was paid actually. Now, the interest that was paid was 25 million. So this is telling us that this company actually has a lot of loan and a lot is going on with the interest. So as a financial analyst, you need to be able to understand how to interpret the financial statement. The first thing is understanding the financial statement. The next thing is interpreting the financial statement. Now, you'll agree with me, we started looking at where the problem is. Oh, we say that this company, their revenue is good, their gross profit is good, their operating profit is good, but their finance cost is on the high side. So we started looking at things that can affect the finance cost. And we say, oh, let's check the long-term loan, and we check the statement of financial position. We see that the loan actually increased. The interest-bearing loan and borrowing increased. So yeah, so and when we check the statement of cash flow also, we looked at the cash flow from financing activities. So intercompany loan was so net cash used from financing activities was 84 million. Okay, we have payment of interest portion of lease liabilities. Payment of interest portion of lease liabilities. So from what I'm seeing here, even the loan they collected is less than how much went out for financing activities. Yes, so which means that this is more or less telling me that most likely they are borrowing loan to offset loans. So exactly. So the intercompany loan was 12 million. Okay, so like, oh, this is a group, they have another sister company that gives them loan. That's what the intercompany loan is. The bank loan is 73 million, which is much more higher. Then you have intercompany principal was paid 32 million. A bank loan was paid 111 million. So yes. So now we need to look at the each of the statements individually. We need to look at each of the statements individually. So now we can see that the gross profits increased. The gross profits increased. So the statement of profit and loss, we have the revenue minus cost of sales. For those of us not used to, for those, what's it called? So sorry guys, can you just give me like 2 seconds? Guys, sorry about the break. So let's just move on. So sorry. Okay, so now we're trying to look at each of the elements. We have statement of profit or loss. So the statement of profit or loss tells us the revenue, the cost of sales. Revenue minus cost of sales gives us gross profit. So as you can see, the gross profit for 2024 is 306 million. They said in thousands of naira. Oh, so that means this is in billions actually. If this is in thousands of naira, so it means this is 958 billion. So which means this is 306 billion. Yeah. So other income was 737 million, while marketing. So other income will be added. Marketing and distribution expense is deducted. Administrative expense is deducted. Impairment write back on financial asset is a non-cash item. Okay, so which means that probably they've actually impaired their financial assets in the last year and they have to write it back because of maybe they felt like that impairment, there is what fair value gain or fair value increase of the financial assets. So yes, then we have financial income, sorry, finance income. Finance income was added, finance cost was deducted. That gave us the net finance cost. And then we have loss before income tax. So the loss before income tax is 221 billion. That is huge. Wow, the finance cost was 392 billion. That's massive. That's massive. So now the thing is, aside the loans, the company made a profit of 107 billion in 2024 and 123 billion in 2023. But after they paid interest, the company made a loss. So that means this company, Nestle PLC, is actually in a financial risk. And if care is not taken, I know Nestle has been in existence for a long period of time, but their finance cost is massive. It's actually massive. So except if we do a deeper financial analysis, of this financial statement, we'll be able to. So I think would in a subsequent class, we'll dig deep on this to be able to know what really happened, because we are just seeing this. We've not really done any analysis. We're just trying to see things out. Okay, what's happening? Okay, their interest is high. It seems like, okay, that interest is because their loan is very high. But if we would conduct a proper analysis, we can find out something different. Yeah, that maybe aside the loan, there are other things that we are not seeing right now. So that is what financial analysis is all about. And we can now advise the management of Nestle PLC and say, oh, this is what you guys are not doing right. This is why you are making loss. This is what you need to do to be able to make profits. So that is what financial analyst does. That's what a financial analyst does. So you recommend business strategies can be done to ensure that there is a better performance. Yes, there is a better performance. So now that statement of profit or loss, this is how the statement of profit or loss looks like. Then we also have the statement of other comprehensive income. Now, who can tell us the difference between the statement of profit or loss and the statement? Is anybody raising up his or her hand? Host. Okay, let me call name. Sister Blessing. I can see Sister Blessing. VOH. Can you help us? What's the difference between statement of profit or loss and statement of other comprehensive income? Okay, I guess she's not, probably she's having a glitch. I don't know. Mr. Ahmed, can you hear us? Or if you know the answer, kindly just raise up your hand so we can just answer and we can take it from there. What's the difference between P or L and statement of other comprehensive income?
So, Mr. Mike, good afternoon. So I can hear you, sir.
Oh, okay, good. Good afternoon.
Afternoon,
Yes,
sir.
please, can you answer the question, sir? Yes, thank you.
Sorry, I didn't get the question now.
Okay, I said, what's the difference between statement of other comprehensive income and statement of profit or loss? Are you an accountant? Mr. Ahmed, are you an accountant? Okay, Mr. Abel, you want to help us out? Let's hear you.
Okay. Okay, I
Other
said, okay,
comprehensive
OLM.
income.
I think it showed the revenue, costs, and other expenses over a specific period of consign that also display net profit and loss. And P&L focus on the core business operation. But whereas statement of other income, it reports income outside the core business operation of the firm, such as let's say like interest income, dividend income, rent income, and every other thing that is outside the main core business of that specific organization. That's my point of view.
Okay, thank you so much, Mr. Abel. But you've actually given us the difference between revenue and other income. That's fine. Revenue and other income. So revenue and other income are in a pure hell. Revenue and other income are in the pure. So just like this is revenue, this is other income. So that what Mr. Abel said is the difference between this revenue here and this other income here. So thank you for that. So now the difference between statement of profit or loss and statement of other comprehensive income is that in your P&L, it includes income that have been realized, income that has been realized, whether revenue, whether other income, whether finance income, whether all these are realized, they have been realized. Now, in your other comprehensive income, you have income that are yet to be realized. A very good example is revaluation gain. So take, for instance, the only OCI that we have here is revaluation gain from PPE. Now, you revalue your asset. You say, oh, your assets, you revalue it for, and you recognize a gain of 150 million or 150 billion. That is what happened here. Revaluation gain from property, plant, and equipment, 150 million or 150 billion. That's the figure here. Now, this revaluation gain can be deceptive because you might just revalue your assets so that you can make the asset look big. Yeah. So we say that, okay, it's not like somebody pay you 150 billion for your asset. So you cannot recognize it as an income until probably when you dispose that asset and you realize that gain. But if you just revalue your assets, you can only recognize it as a revaluation gain because you've not realized it. So the OCI help you to keep track of all the gain or loss that have not been realized. So imagine your profit for 2024 was your loss was 164 million loss, and you now add a revaluation gain of 150 million. So that has reduced the loss to 14 million. So you're like, okay, we didn't really make much loss. But meanwhile, this revaluation gain, you have not even realized it. You've not so it can be deceptive. So, and that's why we say that, okay, let us separate the realized profits from the unrealized profit. So the unrealized profits are recognized under OCI, while the realized profits are recognized in the P&L. Does that make sense? Okay, thank you, BO17. I saw your response. Yes, thank you. So now, do we get that? You can just give me thumbs up or say yes in the chat so that I'm very sure that we understand. I need your feedback, please. All right, I can see your thumbs up. I can see. Thank you. So yeah. So that's that. So that's for statement of comprehensive income and statement of profit and loss. So let's look at the statement of financial position because of our time. We'll be rounding this class soon. We'll be rounding up soon. Statement of financial position as at 31st of December. So we have the asset. So don't forget, I said for statement of financial position, we have assets. We have assets. We have assets, we have liability, and we have equity. These are the equity, these are the liability. So for the assets, we have current and non-current assets. So non-current asset, we have PPE, right of use assets under lease, long-term receivables, deferred tax assets, prepayment. So these are the non-current assets of Nesu PLC. Then the current assets, we have the inventories, right of return assets, trade and order receivables, prepayments, cash and short-term deposits. So these are current assets. The equity, we have share capital, share premium, revaluation reserve, share-based payment reserve, accumulated loss. These are equity. Then liabilities, we have non-current, interest-bearing loans and borrowings, employee benefits. Then our total non-current, our current liabilities, we have trade and other payables, contract liabilities, refund liabilities, current tax liabilities, lease liabilities, interest-bearing loans and borrowings. Then we also have bank overdrafts, then provision. So these are current liabilities. So that gives us the breakdown of what's in the statement of financial position. Don't forget, we have the statement of financial position element, assets, equity, and liabilities. So now, the last thing we have is our statement of cash flow. So statement of cash flow reports the cash that comes in and goes out. So we use indirect method. So we start from the profit or loss before tax. So yeah, they started from loss before tax using the indirect method. Then we have adjustment of non-cash item and non-operating items. So all these things you are saying here are non-cash items and non-operating items. Adjustments. Then we have increase in long-term receivables. That's changes in working capital follows. Then after that, we have cash generated from operating activities. So I'm going to share this PDF on the group so that we all have access to it and we can check it later. So we have cash generated from operating activities, cash flow from investing activities, include interest on securities and bank deposits, proceeds from sales of property, acquisition of property. So any cash that you receive, you have to add it. Any cash that you pay, you have to deduct it. So all these ones that are added, interest on securities and bank deposits, means that this actually came in because they have securities, bank deposits. These are the interests that came in as a result of the bank deposits. Maybe they have fixed deposits, and some maybe interest on their savings accounts. Exactly. Proceeds from sale of property, so it's 62 million. Now, acquisition of property, they acquire property and they paid in cash, they incur 72 million. So that is what the statement of cash flow represents. So the statement of cash flow gives us how money comes in. It gives us a breakdown of how money comes in and how money goes out, how money goes. So yeah, so that is just that. All right, so I think that is where we'll be stopping as far as understanding financial statements. For you to be able to analyze financial statements, you need to understand the financial statement. So yes, I'm going to still give you assignments. I'll give you assignments. Yeah, I'll give you assignments. So please take note of the assignments. So, but I think we have just 8 minutes more. We have just 8 minutes more. I would want us to maximize the remaining time. let's quickly wrap up with the other things. So let's look at the key accounting concepts. I will be taking questions by the end of the class. So please, if you have any questions, just note it down somewhere so that I can take them. Now, accounting principles, we have the accrual principles, we have matching principles, we have materiality principles. Materiality concept, we have the consistency principle. So these are different concepts and principles. Now, the accounting concept or principle says that you recognize revenue when it is earned and not when money was received. Now, it says recognize revenue when you earn income, recognize revenue when you earn it, and not necessarily when money was paid to you. Now, this is saying is this revenue accrual concept is telling us that it's possible that money can come in. It's possible that money can come in. It's possible that money can come in, but you've not made revenue. So yes, it's very, very possible. A very good example is somebody say, "Oh, please, I want you to help me. I want to buy this product." Yeah. So I remember myself and someone that is very close to me yesterday. We just went out for shopping, and so after we got everything we want to get, the person said, it doesn't have this type of shoe that and this my person, he said that he really likes that kind of shoe, that he really wants to buy it. So, and there is this, okay, should we pay in advance so that by the time you have it, you just let us know and we'll come and pick it up. Now, if we pay in advance, because the guy has not he has not given us that shoe or that type of shoe, we cannot say that the company has made revenue. Yes, because sales has not been made. So even if money has been received, but revenue has not been made because you've not earned it, you've not transferred the obligation. So, and that is what accrual principle is all about. It says revenue and expenses are recorded when earned or incurred. So your expenses are not only when you pay money. Your expenses can be incurred even when you did not pay money. So let's say, for instance, you are owing your landlord rent for 1 year and you have not paid. And maybe because the reason why you have not paid is because your landlord traveled, he promised to come back in a few months, but maybe due to some reasons, he has to stay for a longer period of time. And before you pay your landlord, you always confirm the account number you will send it to. You sent him a message, he didn't respond, and there's no way you can even pay your rent. The money to pay the rent is available, but you can't pay your landlord. Because you've not paid your landlord, it doesn't mean that you've not enjoyed the rent, right? Because you've not paid the rent doesn't mean you've not enjoyed the rent, isn't it? Can somebody talk to me? Are we on the same page?
Yes.
So good. So because of that, you have to recognize the rent. So this is in alignment with accrual concept. This is in alignment with accrual concept. Accrual concept says that you recognize revenue when it is earned and not necessarily when cash is received. Recognize expenses when you incur cost, when you incur the expense, and not necessarily when you pay. You can incur, just like rent. Your landlord is not available, you've not paid your rent, but you've incurred that rent for that period. If you're preparing your P&L, even if you pay the rent next year, you must recognize that, oh, this year we incur rent of 5 million naira. So yeah, that is what accrual concept is. So a very good example is a sales made on credit is recorded as revenue today. If you make sales on credit, you recognize it today. That's accrual concept. So don't say it is when I receive the money that I will recognize it. No, you can't do that. Even if the cash won't be received until next month, this prevents distortions of financial performance based on payment timing. So yeah. So matching principle on the other hand says that expenses should be recognized in the same accounting period as the revenue they generate. Now you need to recognize expense in the same accounting period as the revenue they generate. So if you recognize revenue for this month, you must recognize all the expenses incurred for that revenue this month. That is what matching principle means. So a very good example, cost of goods sold is recognized in the same period as the sales, not when the inventory was purchased. Yeah. So you might purchase inventory on the first day of the accounting year, like all the inventory you will use for that year, you've purchased it, maybe because you have a warehouse and the inventory are not perishable. So if you sell a particular good in April, even though you purchase in January, you recognize the cost of sales in April. So please take note of that. And that is how your accounting software are built. You match the expense with the income. That is also part of the key accounting concepts that you need to be aware of as a financial analyst. So materiality concepts talks about the fact that you should only include information that would influence the economic decision of the users in your reports. It is only the information that would affect or influence the economic decision of your users is what you should report. And these are things that are material. So immaterial items are sometimes may not even be considered while you are reporting. So a very good example is 5,000 office snack expense may be expensed immediately, while a 50 million factory machine must be capitalized and depreciated over its useful life. So yeah, so that is actually the materiality. You cannot say you want to expense 50 million factory machine in your POA, it will affect your profits. But if you recognize 5,000 office snack, yeah, you cannot even capitalize 5,000 snack because it is a non-current, it is not a non-current asset actually. So yeah, it's just like an expense. It's an expense. So yeah. Then consistency principle is also one of the accounting principles that you need to know as a financial analyst. So this is what we'll be wrapping up. The same accounting policy and method must be applied across periods to ensure comparability. So if you have different policies, accounting gives you the room to use different policy as the case may be, and you can say, oh, you want to use cost model to value your PPE this year. You have to be consistent with that policy. So you should not just say next year I will change, and in 2 years' time I will change. No, you can't keep changing and changing. You have to be consistent, and that is what consistency principle is all about. You should be consistent in your accounting policy, yeah, and all that. So that's just the summary. That's the summary of your accounting concept. So yeah, so the accounting concepts, as you can see here, they are the practical lens for financial analysis. You must understand them to be able to carry out your financial analysis. So okay, this is where we are going to stop. So but to wrap up, let's quickly look at a practical application and illustration. Depreciation reduces profits, but it doesn't affect cash. Yes, you need to know this. Depreciation affects your profits and it doesn't affect cash. So somebody asked the difference between liquidity and profitability. Liquidity has to do with your cash. Profitability has to do with your profits. So depreciation as an expense does not affect your cash. It doesn't affect your cash, but it of course affects your profit. So we say that depreciation is a non-cash item that allocates the cost of an asset over its useful life. So you bought an asset for let's say 100 million, and that asset you use it for 10 years, and you say, okay, every year I need to recognize 1 million as depreciation. That depreciation is a non-cash item. It doesn't affect your cash because you've paid the 100 million when you bought the asset. So you don't need to you need to recognize the depreciation, your P&L, but that depreciation will not affect your cash. Yes. So a company might show lower profits due to high depreciation, but still have strong cash generation from operation and growth. So it's possible that the company is showing profit is very low, but cash is very high. So this is the impact of depreciation. That's the impact of depreciation. So you need to take note of that as a financial analyst. Why small costs are expensed rather than capitalized? Yes. Yes, small costs are expensed rather than capitalized. So the materiality principle means small purchases like office supplies are expensed immediately rather than treated as an asset, even if they provide future benefits. Even if they provide future benefits, you have to treat them uh, as an expense. Yes, because you are trying to look at it from the materiality aspect. So the benefit is that it reduces the administrative burden while maintaining meaningful financial reporting for decision making. So yeah, so this is where we're going to wrap up. This is where we're going to wrap up. I don't know if there are questions. If there are questions for me, let's take the questions before we call it a day. Before we call it a day. So your assignment is already on the screen, but let's take some questions before we call it a day. If you have questions, if you have feedback, yeah. So have we been able to address your expectation? At least for those of you that you are just joining this for the first time. Okay, for those that okay for the slide. Okay, I need to ask the facilitators on the deliverables. So for the slide, I would have to get back to us. I can see Mr. Abel talking about we're going to engage you on the group for that, on the WhatsApp group for that. So I may not be able to provide an answer for that right now. So, but yes, I would be able to answer that later on. So yes, are there further questions? Are there further questions? And are there feedback? Yeah, are you impressed with what we have done here today? So we just need your feedback. And if there are questions, you can feel free to ask. If you have questions and you want to talk, you can also raise up your hand. If you are not in a noisy environment, our host will unmute you so you can talk. If you have a question, you want to talk, you can raise up your hand. You want to talk about your experience with Plus Business School. Were you able to get value from these 2 hours masterclass? You can just raise up your hand too. Yeah. Can we have the audio recording for further study, please? Yes, definitely. You're going to, for those that make payments, this video is recorded. For those that have registered for the course, we're going to make this available. For those that have not registered, yes, we would make this available on our YouTube channel and we'll share the link. Yes, we'll share the link. So, so yes, the video will be made available for everyone. Are there further questions? Okay, if there are no further questions, I would like to get feedback from one person, from 2 people, a male and a female, on yes, were you able to get any value from this class? What has changed? Or did you just waste did we just waste your time? Yeah. Did you get any value? Or yes, we need that feedback. We need that feedback. So I need a male and a female. So what is the cost? Oh, I don't understand. I don't understand. Cost of what, please? Oh. Okay, the next class is coming up next week, Wednesday. Yeah, the next class is coming up next week, Wednesday, actually. Yeah. Next week, Wednesday. So for those that now, because this class is a paid class, we allow we'll leave this open for the public to join. So yes, we appreciate everyone who joined this class today. So yes, so and it's part of the celebration of independence that we actually make today's class open to everyone. So yes, so the time on Wednesday is going to be 7 p.m. to 9 p.m. But it depends. If we have people that wouldn't have returned from work by that time, we can extend it to 8 p.m. to 9, to 10 rather, 2 hours. Then we would also be meeting on Saturdays, but we won't be meeting this Saturday. But most likely from next week, we'll be meeting on Saturdays also so that we can be able to wrap up since this is a 12-week class. But I think with what we have done so far today, we've been able to cover up what we need to do for this week. So the reason why we'll be meeting on Saturday sometimes is probably if we have more things to look at and we are not able to cover up on Wednesday, then we can cover up on Saturday. So yes, so on Wednesdays our class will start around 7 to 9. Yeah, 7 p.m. to 9 p.m. So yes, that's the time. So I think Mr. Antonia, is it Mr. or Miss Antonia? Talked about, yes, this is the first week. Yeah, Mr. Samuel, this is the first week. This is the very first time we're having this class. This is the first week. For those that would like to join the class is actually 200,000 for the paid class. At the end of the class, you're going to get a certificate. You're going to get a certificate after your course. You've completed the course, you've done all your capstone project and the likes. And also we'll take note of your engagement in class. So yeah, so the cost of the training is 200,000. It's 200,000 naira. Now, because today is Independence Day, anyone that registers today will give them 50% discount. Yeah, 50% discount, which means that you can pay 100,000 naira today to register. Yeah, and this is only applicable today. This is only applicable today, and this is a way we celebrate independence of Nigeria. Yes, so with everyone. So the training cost is 200,000 for 3 weeks, 3 months rather, 3 months, that's 12 weeks. And at the end of the day, you get your certificate of proficiency, and there are other opportunities involved when you register. So yeah. So for those that would like to register, our host will okay, I think the phone number is on the screen. The phone number is on the screen. You can just message this phone number for those that would like to register. Today, the discount is open till the end of today. 100,000 naira is only open for today. So yeah. So you can reach out to the phone number on the screen via WhatsApp. You can drop a WhatsApp message, not call, please. Not call, please. What is the coverage for the whole class? Okay, the class is for 12 months. Sorry, I said 12 weeks, which is 3 months. I know the hosts actually walk us through the course contents, but let's quickly look at that again because of the question I'm seeing on these charts. Let's quickly walk through the course content again. Let me take that again quickly so that we'll understand. This is just the first week. So the course is divided into 6 modules. 6 modules. So the first module is talking about building your foundation, which is what we've started today. Building your foundation, and we talk about foundation of financial analysis, which is what we have done today. So we look at key accounting concepts, accrual materiality, consistency, understanding different business models, linking strategic initiatives to financial outcomes. Then module 2 will be from next week, we'll be looking at financial ratios and performance metrics. Okay, so now this is week 1 and 2. So we've only done key accounting concepts. These other stuff that we have here, we're going to do it next week. But what we've done here is understanding financial statements, then key accounting concepts. Those are the 2 things we've done. The other things we would look at it next week. Then module 3 is financial ratios and performance metrics, which is week 3 and 4. By the end of October, we should be done with week 4. Then in November, we'll be looking at module 3 and 4, which is week 5 to week 8. Then we'll we'll talk about how to build financial models from scratch using Excel and the likes and Power BI. Then we'll also look at investment and valuation analysis. That's appraisal techniques, capital budgeting, also risk assessment, business valuation, and the likes. So then in December, we'll look at module 5 and 6. Dig deep in advanced Excel. We'll also look at Power BI for financial reporting and financial analysis. And we'll also look at applied analysis and career development. So how can you develop your career in this field of financial analysis? So we're going to, and this week we also talk about your final project, interview preparation. We'll talk about what you need to do in order to be able to prepare for interview for financial analysis role, because it's not all about knowing what to do, but also communicating what you can do is very, very important. So these are part of the things we'll be looking at in our module 6. We'll also look at LinkedIn optimization, how you can pitch yourself. So now the good news is recently I actually didn't apply for a job and I was called upon to manage the finance department of an organization. Yeah, and the pay is much better than what I currently earn. So this is part of the things we'll be pitching to you in the 6th week and the 6th module on how you can present yourself. Imagine I didn't apply for the job. I did not. Somebody just checked my LinkedIn and said, oh, you're a chartered accountant. Can you help us do this? And from there, I was interviewed and I got the job. So would be able to teach you all these also. What have I done that's make me to be, at least for recruiters out there to look up to me, check me on LinkedIn and even invite me for interview without applying. So these are things we'll be teaching you in the class. It's going to be very, very practical. So yeah. All right. So if I think I've answered all questions so far. I've answered all questions so far. So Mr. Samuel, I think I've answered your question, sir. I've answered the question, I believe. Let me know if you are good. Is Mr. Samuel still on this call? Oh, okay, good. So yeah, so that is just that. So that was all for this. And at the end of the day, you get your certificate of completion when you are done with your capstone projects, your presentation, and your class participation and quizzes will also be taken note of. So yes, guys, thank you so much for joining this class. So this is proudly brought to you by Plus Business School. This is proudly brought to you by Plus Business School. So if you have any question, you can reach out to us on our official phone number So before we draw the curtain, I said I would like to hear from one or two people. Please, and that is very, very important. Have you gotten any value from this? I want two people to talk. They are going to unmute their mic. Okay, can the cost of the course be reduced? Actually, we've reduced it to the barest minimum. In short, we know of other companies that other schools or educational facilities that charge as high as ×2 of what we are charging now. So we are charging 200,000. I know of other institutes of learning that charge 500,000 or more. So and the fact is that we are even giving out discount today, which means the price has been significantly reduced. The price has been significantly reduced. So the price cannot be reduced further than that. I'm so sorry about that. Yeah. But honestly, the value you're going to get, it's outweigh the amount you are paying right now. Yeah. So that is that. So if you have further questions, just reach out to this number on the screen. And I believe those of you on this call, you're in one of our WhatsApp group. You can also message the admin on the platform. So yes, thank you guys. So let me hear from us. I need two people to raise up their hand. Okay, yes. So now, can you assist in getting international certification? Now, the way this course is programmed is you can actually, by the end of this program, you can use this certificate you're going to get even at the global level. Yes, and if you want to get more recognized certification program, based on what we have taught you here, we can also link you up to examinations. You understand? Maybe in outside Nigeria, although it will be more expensive. But if you can pay and get certificate like for financial modeling, evaluation analysis, and all that, FP&A and all that. So yes, definitely. But you need to start somewhere, which is starting from where you are now, and by the time you come into this training with Plus Business School, you get a certificate, and from there you can even get international job with that certificate. But you just need to continue to learn and how do I put it now? Dig deep in other aspects of financial analysis and the like. So yes, you definitely get the certificates here. Yes, and if you want additional certificates, we recommend other programs you can enroll for. Yes, as time goes on. So yeah. If you want to, but you may still not do other certification program because the knowledge you are getting here would help you to be able to perform because this is practical. Yes, we're going to teach you practical things. So yeah, so that's just that. All right. Who wants to talk now? It's like all of us are just quiet. I said I want two people to talk, one male and one female. So who wants to go for us? Madam Gloria, I would allow you to talk. Then I'll allow Mr. Israel to talk. So I've actually asked you to unmute. So kindly give us feedback. Did you get any value from this training? Or did you just waste your time? We need your honest feedback.
Okay.
So yeah,
To
please go
say
on.
thank you. Thank you for the teaching. It was very impactful and I learned a lot. And truly, it's related to my field and what I do currently. Actually, it's something I would love to dive into, especially the analysis aspects, where I can analyze our financial data for the management decision. So I've really learned a lot, and it's a good one. Thank you, sir.
All right. Thank you so much. Thank you so much, Madam Glory. It's good to have you on board. But I believe you'll be enrolling for the master class, at least to get more value.
Um,
Or have you registered?
no, I've not yet registered.
Okay.
Yeah. So I want to, but I'm preparing for my ICANN, so it's a whole lot of cost for me at this moment. That's just the. But then, if I can't register for this one, I'll look out for your next opportunity because it's something I would really love to have aside just my ICANN certificate.
All right. All right. So yes. So if you're really interested in this, you just make sure you message the number. You know, yes, message the number, and yes, you can also engage us on social media. Even though Plus Business School is just set up newly, but people that are in public plus business school, they are in other organizations before now, so they have been doing this over. So maybe if you can just check on our social medias to find out that, oh, we're just trying to build a brand. Yeah, so you can follow us on all our social medias. If you are really getting value from what we do, follow us, tell others about us and all that. So tell others about us and all that. So yeah, so let me allow Mr. Israel to also give us his feedback before we draw the curtain. Mr. Israel, did you get any value from this, or did we waste your time?
Um, thank you very much for this opportunity to be part of this teaching. It was so much impactful. Though I'm just a small business owner now, this teaching, I believe, will prepare me for growth, prepare me for growth in the line of business. So thank you so much. That's what I just want to say.
All right, yeah, thank you so much. Thank you so much. Thank you so much, Mr. Israel. It's good to have you on board. So yeah, so thank you guys and happy independence once again. Let's not forget the discount of 100,000. So which means we're giving you the privilege to pay 100,000 naira for today. By tomorrow, the price would have returned back to 200,000 naira. So yes, so we have some people that have registered for the program already, and they also join us today. So yeah, so but those of us that are yet to register, so that you don't miss from the good thing of the masterclass. You know, all these things is true investment. And you know, for me, there are some hard decisions I made in the past, and I'm enjoying the benefit right now. So yeah, this knowledge that I'm training you are also somewhere, and I paid. Yeah, I paid, and I was able to get the knowledge. I was able to impart knowledge to others, and people are able to get organizations are able to get benefits. Yes, thank you guys once again, and that will be all from today. I'll be handing over back to the Mr. Adekoya. You can have the floor, sir.
Thank you, Mr. Mike. Okay. Thank you. I personally to in some things looking at it from that perspective. So thank you so much. So we'll be meeting next on Wednesday. That'll be around by 7 or 8, depending on how it is. So thank you everyone. Thank you Israel. Thank you Ogegbola. Thank you everyone. Thank you Mr. Samuel. Thank you Antonia. Thank you everyone. Yeah, we've come to the end of this meeting today.